Coming up on Business Incorporated. Ghana signs fishing pact with 3 ECOWAS members. Tanzania and Kenya agreed to reduce work permit fees. A national carrier, Rwanda Air, resumes flights to Southern Africa. Hello and welcome to the program. I'm Ladi Williams. First off now, let's see how your money performed at intraday. Well, trading started on mixed note on the African continent. Nigeria's NGX was positive, up 0.11%. While South Africa's GSC index lost about 1.72%. Big loss there at intraday. Well, Egypt fell by 0.78%, and Kenya closed Friday's session positive, up 0.20%. And in the Middle East, that was mostly negative, with Abu Dhabi index down more than 1%, while Dubai's market rose marginally by about 0.01% there, just saved by that one position there. Another region, Saudi Arabia's index fell by 0.51%, while Qatar was down 0.29%. Businesses across Europe are coping with a raft of new restrictions as governments respond to the fast-moving Omicron variants of the coronavirus. The Netherlands went to a strict lockdown over the weekend, and Germany has meanwhile suspended flights from the UK in an effort to slow the spread. Well, we have Stephen Beardsley joining us now to tell us more. Great to have you there. This is typically a quiet week for many markets leading up to Christmas. Fair to say that that won't be the case for this year?
Yes, certainly not. We've already gotten a taste of that Monday morning looking at markets in Asia where shares largely fell. The price of oil also falling, especially on fears of that new variant, not only because of those fears, but driven in part by them. And in particular, the restrictions that we've mentioned, those in Netherlands, that is a big concern. That's a total lockdown there. The restrictions also for Germany against all travelers from the UK. That's pretty significant. Residents are allowed to come in, but they will have to quarantine, of course, for a long period, 2 weeks, and that's even if they are vaccinated. So that's already a taste of further restrictions that could be coming, and that is what's leading to fears here and what could drive markets down in the coming days, especially as we look over at the U.S. Now, the U.S. European residents just got access to traveling back to the U.S. after a period of not having that access. That is vaccinated European residents. If that is at risk again because of Omicron and because it seems to be dangerous even for those who are vaccinated, or at least infectious for those who are vaccinated, that leads one to imagine very easily that there could be new restrictions for the U.S. for European travelers, and that would also probably lead to further souring from markets.
But what could Omicron mean for businesses in Europe?
Well, many economies in Europe were hoping for a solid 2022. They really wanted to see their economies pick back up after they began doing that in 2021. But we're still dealing with the Delta variant. Now this throws a wrench into those plans. The variant is moving fast, and it could especially affect retailers and service industries, as have previous waves. But not only that, because of that resistance to vaccines, it's likely that industry areas that to this point have really been exempted from a lot of the most previous waves and from the real infection waves, they've managed to get along. It seems like they may be at risk as well. If you look at the western half of Germany, there is a company, LMC Caravan. They make recreational vehicles, and they actually suspended their production last week after many workers on their production lines tested positive in PCR tests. Now, of 90 PCR tests, more than half have come back showing the Omicron variant so far, and many more tests are remaining out. Now, that's at a production site in which 75% of the workers, according to the company, are vaccinated. So that already gives you a test of how not just the retail side, but also industry itself could be hit hard, and that means that there will be staff absences on both sides of the economy, and that could be really devastating, in the weeks to come.
The past weeks have, seen especially high case numbers in Germany. What is that meant for businesses leading up to Christmas?
Yeah, now in this case, again, that's still that Delta variant that has been really widespread across Germany in recent weeks. That has led to a lot of the not lockdowns, but tighter restrictions on retail that we've seen. Those incidence rates are falling, but of course, Omicron is spreading quickly. Now, retailers have already said that they've had a bad season so far because of those tighter restrictions. In many cases, shoppers required to submit either proof of vaccination or of a test, and in ever more cases, they can't present a case of a negative test anymore. That is, they have to be vaccinated or recovered. And so many businesses have said in surveys that is really dampening the mood. It's dampening access to their stores. The recent survey by the German Retail Association saying that a clear majority of more than 1,000 businesses surveyed said that they have not seen the sales that they thought they would have seen otherwise, and that they've been disappointed so far. So that gives you a taste of where things are. The question is, will Omicron make that worse? Will there be tighter restrictions, tighter lockdowns? It's hard to say at this point. The health ministry has said that they do not envision a lockdown over the Christmas week, this coming week, but that after that, things could start to get a little bit more serious. That's the implication, and that's what many are going to expect. And that is likely to have a serious effect on businesses that were already struggling, many that were already reeling.
All right, that's Stephen Bersey there, right there in Berlin. Thank you so much, Stephen. And I'm moving on. Look at Africa's economic outlook for 2022 as existing and emerging crises, conflict continue to batter the continent and affect its developmental outlook. 3 major elections are scheduled. We'll have Angola and Kenya in August 2022 and Senegal in January and July. These elections will influence the political trajectories of the countries and are likely to increase tensions, maybe violence, and particularly in Kenya and Senegal. Now, we'll look at how these elections will impact economic outlook for these countries. Join us now. We have Steve Ogutu, development expert in Kenya. Great to have you.
It's always a pleasure to be on your show, Larry.
Thank you so much. So, what's the nexus between politics and economic growth?
Of course, there is a direct connection between politics and economic growth. I mean, you can tell from a few countries in Africa that are experiencing political instability, such as South Sudan, Somali, and you can see how their economies are doing. And so that explains that for there to be a stable economy in any country, then there has to be, political stability. And that those two go hand in hand. And I think it's very important that the countries in Africa really try their best to make certain that there is political stability at whatever cost.
Okay, and studies show that most countries experience economic recession 2 years before and after elections. How can these be, addressed to avoid hurting fragile economies?
That's right, and I think it's a very unfortunate incident, and it hurts economies a great deal because I'll give you a case of Kenya right now. Our election is just next year. And since last year, we have seen increased political activities. And what means is most of these political activities are actually associated with a number of violence, so to speak, tension here and there. And what that does is it scares away investors, and the stock markets are performing poorly, And unfortunately, this is always the case, like 2 years after the election, because you're trying to address the aftermath of the election, tensions here and there, parties that are feeling aggrieved because of losing elections here and there. So I think there is a very direct connection, and I think it's very important that even as the 19 countries that are going to election in 2022, including Lesotho, Chad, and Somaliland, among others, it's very important that they make certain that they create an environment where investors don't have to run away because of fear of their investments being looted or being destroyed because of political violence.
Right, and quite a number of countries heading into elections in 2022. But what can the government actually do to, enhance economic development?
Right. I think for me, the primary role of the government when it comes to attracting investment in a country is basically putting in place policies that are friendly to investors, policies that are friendly to local entrepreneurs, and beyond that, respecting the rule of law. I mean, countries that I've mentioned before, like South Sudan, Somalia, and many other countries in Africa, and actually even globally, that are experiencing economic recession. It's because, if you study keenly, it's because of leaders very reluctant when it comes to respecting constitutionalism or implementing constitutionalism, and that is the backbone of democracy. So I think that for there to be stable economies, even as we head into the future of the continent, I think it's very important that that these countries really and these African governments really learn to follow the constitution, as it were, because then we get to achieve, when there is strong democracies, then what that means is we have strong economies. There are studies that have been done on that, and there is a very direct link between strong democracies and strong economies. And so I think that is where the focus needs to be getting into the future in the continent.
Right. All right, Stephen Ogutu, always great to talk to you, development expert right there in Kenya. Great to have you.
Always a pleasure to be on the show, Larry. Have a good afternoon.
You too. Thank you. All right, now, moving on, I would see shares in Asia Pacific were lower today, with multiple major markets in the region seeing big losses as China slashed its benchmark lending rate for the first time in more than 1.5 years. Mainland Chinese stocks closed lower, with the Shanghai Composite down 1.07% to 3,593 points, and the Shenzhen Component falling about 2.7% to 14,569 points. Hong Kong's Hang Seng Index slipped about 2% of its final hour of trading. Elsewhere, the Nikkei 225 of Japan closed 2.13% lower at 27,937 points, while the Topix Index shed 2.17% to 1,941 points. South Korea's Kospi ended trading day 1.81% lower at 2,963 points. Australian stocks also declined on the day, with the S&P ASX 200 down 0.16% to 7,292 points. MSCI's broadest index of Asia-Pacific shares outside Japan traded lower at 1.92%. And stock futures were lower in early morning trade following a losing week as investors continue to grapple with the resurgence of COVID cases and an upcoming shift in the Federal Reserve's easy monetary policy. Futures on the Dow Jones Industrial Average dropped 455 points. The S&P 500 futures dipped 1.39%, and NASDAQ 100 futures declined 1.28%. The major averages are coming off a negative week, with the S&P 500 declining 1.9%, and the tech-heavy NASDAQ Composite dropped nearly 3% last week as investors dumped high-flying growth stocks on the prospect of high interest rates, while the Dow slipped 1.7%. Some investors are hoping for a Santa Claus rally into the year-end, which calls for positive market performance in the last 5 trading days of the year and first 2 trading days of January. All right, we'll take a break now. When we come back, we'll look at other African stories. Do stay with us. This is Business Incorporated. Welcome back. Still watching Business Incorporated live on Channels Television. Now to our next conversation. The International Monetary Fund approved the disbursement of $258.1 million for Kenya after completing a second review under a 38-month program to address debt vulnerabilities, the COVID-19 response, and enhancing governance. Delivery of the IMF funds brings the total disbursements to $972.6 million out of a total of $2.34 billion available under the country's program approved in April. Well, join us now to analyze the expected impact is Matt Kinniger, practice leader, Front of You, Sub-Saharan Africa. Great to have you on the program. Good morning or good afternoon.
Hi. Thanks very much for having me on the program today.
Yeah, so, given this latest disbursement of IMF funds, how much pressure are public finances under in Kenya?
Yeah, certainly. So Kenya's public financial position, or the fiscal position, is not great. The bailouts of Kenya Power and Kenya Airways in October indicate how much pressure government finances are under and how much pressure state-owned enterprises are under, and how the government needs to try to keep these afloat. Additionally, the budget deficit in Kenya is expected to peak at about 8% of GDP this year, and public debt is expected to rise to about 72% of GDP in 2023. So certainly the government is facing quite substantial pressure from a public finances perspective. And what this means is the government's projected spending increases over the next couple of years are unlikely to materialize. However, we don't expect the government to face a significant debt crisis. And this is because the country's economic growth outlook overall is relatively strong. This does mean that it will continue to be able to service its debts more or less. And also the government has received fairly substantial praise from the IMF for its efforts to try to consolidate its public finances and constrain public spending growth. So certainly there is a lot of pressure, but we don't expect the fiscal position to deteriorate over the next year.
All right, and how will the upcoming election in August next year affect the government spending and investment priorities?
Certainly. So the election next year comes at a bit of an awkward time for the government because it is trying to cut spending, but ahead of an election, it will be reluctant to do so. In essence, what the government will do, in our view, is that it will delay the most painful austerity measures, such as spending cuts and tax increases, until after the election in August 2022. This means civil service wages are probably going to continue to rise for the next year or so, and the government will continue to prioritize infrastructure investments, including on schools and clinics, for example, the construction of these new projects. However, we do expect the government to severely constrain procurement of goods and services, especially non-essential goods and services procurement, over the next year or so. And after the election, there will be a more substantial adjustment to spending and taxes. So we are expecting taxes to increase a bit more aggressively in 2023. We're also expecting some more substantial spending cuts and perhaps some further delays to investment projects announced in 2023. And this is because after the election, the government will have more political room to implement austerity measures. So certainly the election does affect how the government will be spending and changing its tax policy over the next year or so.
Right. And what do the government's fiscal pressures actually mean for, the economic outlook of Kenya?
Well, I'm painting quite a grim picture when it comes to the public finances. And certainly it does, the government's weak public financial position does curtail the growth outlook for Kenya. And this is because over the last decade or so, government spending has been growing by about 5 to 7% in real terms over the last few years. And it has been a major contributor to growth. However, overall, we would say that the outlook for Kenya's economy is still quite upbeat. And this is because the private sector has been extremely resilient in Kenya throughout the pandemic, and it has continued to display this resilience at the beginning of 2021. So Q2 data has come out for Kenya. It's very upbeat. It's the strongest economic growth on record. And we are seeing industries that are exposed to exports doing very well. Manufacturing, the banking sector, credit growth is very upbeat in Kenya, and consumer spending is also quite resilient. So although public finances are constraining growth in Kenya and will continue to do so over the next year or so, the private sector is compensating for this to a certain degree, and we are expecting the economy to grow by about 4 or 5% over the next couple of years. So certainly still quite an upbeat growth view for Kenya when we look at the overall picture.
All right, quite positive and upbeat there. Well, Matt Kennigan, Associate Practice Leader, Sub-Saharan Africa, Fraud Review. Thank you so much for always coming on the program. Thank you.
Thank you very much.
All right, so moving on now to West Africa. We see Ghana signed a pact with 3 other countries in the ECOWAS region to start a joint fisheries observer and monitoring program in 2022, it's including Togo and Benin. The joint observer program is aimed at ending illegal, unreported and unregulated fishing practices in the ECOWAS regions bordering the seas, known as Fisheries Committee for the West Central Gulf of Guinea. Speaking at the signing, the Secretary General of the FCWC said a joint observer program would help the FCWC region to effectively and efficiently fight IUU fishing. And Kenya and Tanzania have agreed to reduce work permit fees charged on nationals seeking short and long-term work contracts in the 2 countries. The period it takes to get a Tanzanian work permit for professionals will also be reduced from 90 days to at least 48 hours. The decision was arrived at after Kenya's President Uhuru Kenyatta and his Tanzanian counterpart Samia Suluhu pledged to remove the remaining non-tariff barriers impeding trade. Both countries identified dependency on each other and how both ecosystems are intertwined, hence the need to resolve issues that hinder citizens from conducting business and interacting with one another. National carrier Rwanda Air has announced the resumption of flights to southern Africa starting December 23rd. Decision to temporarily ban flights between Kigali and the southern African region was part of the new measures to control the Omicron variant of COVID-19 from spreading into countries, which was announced on November 28th. However, 2 weeks later, Rwanda recorded its first 6 cases of Omicron variant, forcing the government to impose stringent measures consecutively. Among the new travel directives to curb the spread, arriving or departing passengers at Kigali International Airport must present a negative COVID-19 PCR test taken 72 hours prior to departure and a 3-day mandatory quarantine at designated hotels. And the unemployment rate in Ghana has almost tripled in a little more than a decade. There's more than 1.55 million people, about 13% of the West African country's economically active population, are out of work. Ghana, which doesn't produce regular data on unemployment, recorded a jobless rate of 5.3% in the last census in 2010. Research information shown on a statistical website estimated the proportion of people out of work at 4.5%. According to the 2021 Population and Housing Census, if the minimum age of 15 years is applied, the proportion of people without work is about 7.8%. Proportion of economically active males 15 years and older was 63.5%, compared with 53% for females, according to the report. Well, Ghana's population increased to about 30.8 million in 2021 from 24.7 million in 2010, according to the census. And Egypt's revenues from the Suez Canal recorded $6 billion from January until the first half of December. That's the highest level ever. According to the Canals Authority chairman, this year the navigation rates have been very promising. In November, the vital waterway recorded revenues of about $571.3 million, marking the highest monthly level ever. It also broke its highest monthly tonnage record with 113.5 million tons in November. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.